Okay, let's unpack this. Welcome to the deep dive.
Hey there.
Today, we're cutting straight through the noise of the third quarter 2025 earnings call for Atlanta Braves Holdings.
And, you might think a deep dive into a sports company right after they miss the playoffs would be, well, a little depressing.
Right.
But management delivered this fascinating paradox. We've got record profitability on one hand, and on the other, a promise to go on a massive spending spree.
Exactly. So our mission here is to really distill the key numbers and what management was saying. We want to focus on how their core baseball operations, which are, naturally volatile, interact with that stable, high-growth real estate segment they've built.
That's the whole game right there.
So let's hit the results snapshot first. What was the headline number for Q3?
The top line was strong. Total revenue came in at $312 million. That's a solid increase of over 7% year over year.
Over 7%. Okay.
But honestly, the real story isn't the revenue. It's the just astonishing surge in profitability.
Let's talk about that. Adjusted operating income before depreciation and amortization, we call it adjusted OIBDA.
Yeah.
It hit $67 million. That's a jump of over 113% from last year's Q3.
I mean, just think about that. 113%. That's a massive margin expansion.
It's huge.
It is, and the operating income tells the same story. It surged to $39 million, up from just $6 million in Q3 of 2024.
So what drove that?
Well, it's really two things. First, you have revenue increases everywhere, baseball and the mixed-use development. But the second part is this really notable reduction in baseball operating costs.
That reduction in operating costs is the key lever, isn't it?
It really is.
They mentioned lower than expected player salaries and variable costs like retail and concessions.
Right.
So I have to ask, was this huge profit surge a brilliant strategy, or was it just a happy accident from having a slightly cheaper roster that didn't go deep into October?
That is the critical point. Management, of course, presented it as operational efficiency. But that payroll flexibility created a ton of cash flow in Q3. They managed to monetize really well selling tickets, concessions, while keeping a tight lid on those variable costs.
So this sets up the narrative.
It sets up the whole narrative.
Yeah.
They generated this profit so that they can fulfill their promise to spend big going forward.
Okay, let's transition right into that with a deep dive on the baseball segment itself. We know the 2025 season ended without a playoff berth.
Yeah, a disappointment for fans.
But management insisted the brand strength and, the fan passion are still robust.
And they actually have the data to back that up, which is fascinating. Despite the on-field result, the team sold over 2.9 million tickets in 2025.
Wow.
That keeps them firmly inside the top 10 for attendance in MLB for the 5th consecutive year.
So people are still showing up.
They're showing up in droves. This was the 4th highest number of tickets they've sold in the past 25 years, 24 sellouts.
That level of consistency, even when the team isn't winning a championship, is so crucial.
It is.
It signals that the fan base is just locked in, probably through those multi-year full season and premium packages they mentioned.
Absolutely. And the other revenue streams are performing too. Broadcasting revenue, for instance, increased to $79 million.
And that's from the new TV deal, right?
Primarily, yeah. The renegotiated local rights agreement they signed at the end of 2024. It's already showing immediate financial returns.
Now let's cover the big organizational shift. After 10 seasons, a long time, field manager Brian Snitker transitioned to a senior advisor role.
And they moved fast. They named Walt Weiss, a 2-time World Series champion, as both a player and a coach, as the new manager.
That seems like a move for a new direction, but without, totally shaking up the foundation.
I think so. They also made a point to highlight strong individual player performance.
Which you need to do, right? Build some positive momentum.
And establish trade value. They talked about rookie Drake Baldwin's breakout year, Matt Olson winning a Gold Glove, and Chris Sale hitting that big 2,500 strikeout milestone.
All valuable assets. Which brings us to the moment everyone on that call was waiting for. The outlook for future player spending.
This is the headline. The CEO stated explicitly, the goal is to be a win-now team.
Like a very loud statement.
It's more than loud, it's specific. He reiterated their goal to get back to being a top 5 team in player salary.
And where are they now?
In the top 10 range. And he stressed they plan to be quite active in the free agent and trade markets.
Okay, that sounds great. But after missing the playoffs, is this top 5 payroll promise sincere? Or is it just, good PR to appease a frustrated fan base, using the Q3 profits as a temporary excuse.
That's a fair challenge. And look, if they were purely reliant on game day revenue, I would be pretty skeptical.
Me too.
But they emphasize the stability from their other revenue streams, especially those multi-year premium packages we talked about. But the real answer to your challenge is found right across the street.
In the other half of their business model.
Exactly.
And here's where it gets really interesting. Let's shift focus to the Battery Atlanta, that mixed-use strategy.
The de-risking engine, as they call it.
It's designed to complement the baseball team and reduce that dependence on whether they win or lose on a given night.
And the numbers prove it is absolutely working. Mixed-use development revenue grew over 56% year over year in Q3. 56%.
To what, $27 million?
$27 million. In one quarter.
That is startling growth, especially for real estate assets. So what does that mean in context?
If you zoom out, it means the Battery is now generating more than $100 million annually in revenue.
From zero.
From zero in less than 8 years. This consistent non-seasonal revenue stream is now about 11% of the company's total revenue for the year.
And that is the financial leverage that makes the top 5 payroll promise believable.
That's it. The baseball team drives the traffic. The real estate captures the year-round dollars.
It's basically turning a sports team into a year-round marketing asset for a commercial property. It's brilliant.
It is.
What specific drivers did they mention for that Q3 surge?
2 main things. First, that strategic acquisition of Pennant Park earlier in the year.
Okay.
Management expects that complex to be 90% leased by the end of the year. It was under 85% when they bought it. That's swift value creation.
And the second thing?
Just being an active year-round destination, not just a place people go for 81 games a year.
Right.
The Battery hosted 195 events outside of baseball games through September.
Get out.
72 concerts at the Roxy just in Q3. And get this. They also expect to host over 150 separate events inside Truist Park itself this year.
So the stadium is a full-service event venue.
Most days of the year, yeah.
And on the Capitol front, they're still expanding. They announced a 10-year extension with Delaware North for food and beverage.
And they're leveraging their high-end patina division for better options across the whole complex.
Plus, they referenced that upcoming Henry development.
Yeah. The apartments, hotel, condos, right across from the park, connected by a new pedestrian bridge. They are nowhere near finished expanding this gold standard model.
Okay, let's zoom out a bit. Management emphasized that there are positive macro trends helping the entire MLB.
Yeah, baseball is healthy right now. National viewership is up big. ESPN up 21%, TNT Sports up 29%.
And attendance.
Total MLB attendance was over 71 million fans this year. That's the 3rd straight year of growth, which hasn't happened in almost 20 years.
So against that backdrop, they're positioning their business model as the best in the league.
They called it the gold standard. They see themselves as the blueprint that other pro franchises, in the NFL and NHL are now trying to copy. They feel like they've cracked the code on de-risking a sports asset.
And the final piece of that puzzle is liquidity. Do they actually have the cash to back this up?
They do. They reported a very healthy $115 million in cash and cash equivalents, plus another $215 million in untapped liquidity through 2 baseball revolvers. They have the financial firepower.
So they have the intent, they have the model, and they have a capital.
Yep. The market is now just waiting for them to execute.
Which brings us to our closing segment.
It does. This is not financial advice segment.
Let's be very clear.
Everything we're about to discuss is purely for entertainment and, a thought provocation. It's all built directly on the facts from the earnings call.
So we have management committing explicitly to being quite active and wanting a top 5 payroll.
Right.
The stock price reaction over the next quarter is going to be dictated almost entirely by which star players they get.
And what they cost. The risk here is market expectation. Investors know they can spend. But if they only get 1 star when the market wanted 3...
the stock could still dip from disappointment.
Exactly. Or if the cost for that one guy is just astronomical. This whole situation just sets the stage for massive volatility.
So here's our outrageous but plausible trade idea based on that volatility. A short-term options play. Specifically, a strangle.
Okay, wait. For anyone listening who might not trade options every day, what exactly is a strangle in plain English?
It's just a 2-sided bet on a huge move. Either way, up or down.
Okay.
You're leveraging the uncertainty of the free agent market. You simultaneously buy a short-term out-of-money call option that's bet the stock will soar on a huge signing.
And at the same time.
And at the same time, you buy a short-term out-of-the-money put option. That's your bet that the stock collapses if they fail to deliver or if they overspend.
So you're not betting on a direction. You're just betting that the stock is going to move and move big one way or the other.
Exactly. It's a pure volatility play centered around, say, the start of the free agent frenzy or a December signing deadline. You're using their known intent to spend against the completely unknown timing and impact of that spending.
Fascinating idea.
So, to quickly recap, Atlanta Braves Holdings delivered exceptionally strong Q3 numbers. That was thanks to that huge OIBDA surge from cost control and, of course, the high-growth real estate segment.
And now they're setting the stage for very aggressive, high-risk, high-reward moves in baseball, all backed by solid liquidity. So the concluding thought for you, the listener, is this. With their financial stability now basically secured by this gold standard mixed-use development, how quickly can they actually translate that liquidity and those bullish salary goals into tangible on-field success?
And how will that success, in turn, accelerate the value of the battery?
That is the compounding question that's going to drive this stock.
A fantastic deep dive into a uniquely positioned organization. Thank you for joining us.
My pleasure.
We look forward to sharing our next deep dive with you soon.